Like, tragedies don't define you, they reveal you.
Oh,
right.
Yeah.
So for me, those things happened to me at an early age. It helped me because, like, if I can get through this, the rest of life is easy.
Fact.
If you're a W-2 earner, did you know that your job allows you to be paid as either a W-2 employee or a 1099 contract? Use these working years to buy assets so that you can have a retirement plan, but you don't got to worry about that. At 40, you can quit.
Yeah.
You can live off of all the borrowed money.
Yeah.
Then you buy a life insurance policy so that when you die, you're like, all right, my kids don't have to pay these loans back because my life insurance will give them all the money that they need. Because life insurance proceeds are tax-free as well. And they're using this money to pay off all the debt. So now you can retire earlier doing this method than depending on a retirement plan.
Wow.
You know what I'm saying?
Hey, wait. I know you want to watch this next video, but listen, if you are an entrepreneur, business coach, business consultant, or a small business owner who has a story and wants to learn how to create multiple streams of income from your story, I need you to text me right now, my book, to 646-687-4152. That is my personal number. I have been an author for over 12 years. I've written 10 books. 4 of them have been bestsellers, and I've sold over 100,000 books. But I've also helped a lot of my clients take their expertise and put it into a story, then create multiple streams of income from that. So I want to help you do the same thing. So text my book to 646-687-4152. All right, let's go back to the video. So welcome to another awesome episode of Inside the Vault with Ash Cash, the greatest money mindset show on the planet. When I tell you that this next guest, y'all know him already, but he's fastly becoming the tax expert of the culture who is helping people live a tax-free life legally, ethically, responsibly. Like, that's the only disclaimer I'm going to make, right? Because we know when we start talking about taxes, all of a sudden everybody becomes a CPA.
Yeah,
right?
Exactly.
Everybody's a CPA. Everybody becomes IRS. Everybody becomes the ethical police. And this wasn't even part of my intro, but I want everybody to hear this because stop fighting for limitations, right? People be fighting for limitations.
If you fight for your limitations, you get to keep them.
Get to keep them, yo. Like, literally, people are trying, like, a play that works that people have made millions of dollars using. People have created, have saved, like people have deciphered the tax code and figured out how the wealthy been doing this for years, though.
Yeah.
And then and nobody questions them. And the moment our culture gets the information and we start doing it, are they gonna?
We try to poke holes in it because it seems too good to be true. Because we live in a scarcity mindset, not an abundance mindset. So instead of finding out how to make it work, we try to figure out ways of how to make it wrong.
Man, and that baffles me, and it hurts my heart, DJ Khaled voice, because I'm like, yo, what? If you're broke. Right, because they always talk about, it's a scam, right? Scam, still confused about money.
You already know.
If you broke, right?
Yeah.
Would you rather figure out how to listen to? Would you rather listen to somebody else that's broke saying something's a scam, or would you rather listen to somebody who is a public figure though too, right? So it's not like nobody's hiding. Like it's not like it's public. Like, would you want to listen to somebody who has a track record of helping other people build wealth, right? Exactly. And so that's my disclaimer. That's my rant. I just want to say that because you know what it is though. Also, I get the most flack when we talk about taxes and things that could, like, tax code, things that it's really in the law. Yeah. And we get the most flack for that. So
let's talk about it because I think that we get the most flack about it because people view the tax code the wrong way. Yeah. Most people think the tax code was created.
Wait, but hold on. Yo, ladies and gentlemen, we got Carter Cofield in the building, right? Welcome to another awesome episode of Inside the Vault with Ash Cash, the greatest money mindset show on the planet.
The greatest.
We got my brother, Carter Cofield in the building. CPA, certified public accountant, which means what? He did the hard work. He studied. He continues to study. He knows the tax law, and he can help you create tax-free living. My brother.
How you doing, man?
The tax expert of the culture.
Ooh,
all right, now you go.
I'm taking that.
Take that.
Tax
Yours,
expert
brother.
of the court culture.
That's
me.
it.
So, to your point earlier, most people think the tax code was created to make us pay taxes.
Yeah.
When actually the tax code was created to teach us how not to pay taxes. Yeah. And to prove that, like, the tax code is about 77,000 pages. 5% talks about how to pay taxes. The other 95% talks about how to avoid paying taxes. Yeah. So what do you want to focus on? The scarcity 5% or the abundant 95%, right? The tax code is literally a book that teaches you page by page how to avoid paying taxes, because the government says this. Our government is lazy. They're like, hey, if you help us do our job, we'll give you tax breaks. If you help us do our job a lot, we'll give you a lot of tax breaks. If you do everything we want you to do, we'll let you live tax-free. So the book is teaching us how to live tax-free, but guess what? We can't win the game of taxes if we don't know the rules. So our job is to study the rules, learn the rules, so tax time, we ain't looking like a fool. You know what I'm saying?
Fact. Yo, I'm going to jump right in, though, too, because you gave me a play earlier behind the scenes, so you always giving me great plays. But this play was like mind-blowing when you were talking about for our people, because most of our viewers, we call Henrys, right? So they're high earners, not rich yet. So they make a lot of money, right? They always trying to figure out how they could, build assets, get into stocks, start a side hustle. So a lot of them have a 9-to-5, great paying 9-to-5s, right? But they always want to know how to make more money. And you gave me a play around switching their status, like if they work a 9-to-5, switching their status from a W-2 to a 1099. They can get. Give me that whole play, brother.
I got you. So I need you all to understand that the tax code was made to benefit entrepreneurs and investors, not W-2 earners, right? But some people, like, they don't want to start the business. They don't want to start a side hustle. They love what they do at their work, and that's fine. But my thought process is, how can I help them not just make the bag? How can I help them keep the bag, right? So if you're a W-2 earner, did you know that your job allows you to be paid as either a W-2 employee or a 1099 contractor, right? So most employers, not all, if you work for the government, they're not going. If you work for the state, they're not going. But most other employers allow you to be paid as a W-2 earner or a 1099 contractor. So what my recommendation is, go to your employer and say, hey, I know you're paying me as a W-2, but I would rather be paid as a 1099 contractor. Majority of their time, they're going to say yes, because they save money paying you as a contractor versus an employee. So one way they save about 7% in taxes by paying you as a 1099 versus W-2 employee. So you can go to your boss and say, hey, I would like you to pay me as a 1099, and I also know that you save 7% in self-employment taxes, so I also would like a 7% raise. You see, they don't give you that raise if you don't know that. But if you come correct, like, hey, I know you're saving 7%, so I would like a 7% raise because you're saving money. And 70% of my students that do this get approved. Wow. So now, let's say you're making $100K. So now you went from $100K to $107,000. So now you got a $7,000 raise. That's number one. Number two is that when you're paid as a contractor, you're now a business owner according to the IRS. And due to the recent tax changes, just by being a business owner, you get a 20% tax deduction just for being a business owner. Wow. Right? So it's called the QBI deduction. You don't have to do anything. You get a 20% tax deduction just for being a business owner. So now, since you're paid as a contractor, you just got a $7,000 raise, 7% raise, but now you also get a 20% tax write-off just by switching the way you get paid. So that's like a $21,000 tax deduction. So you just got a $7,000 raise and a $21,000 tax deduction at the same time. Not to mention now, because here's the thing, Ash, 70% of people stay at jobs that they don't like just because of their benefits. They don't want to lose their health insurance. They don't want to lose their retirement, right? Okay, cool. Did you know that when you become this 1099 contractor, you can get your own health insurance through the marketplace? Not only can you get your own health insurance, your health insurance premiums are tax deductible. So now you get your own health insurance plan, and now you get to write off your health insurance premiums on your taxes. So you get a 7% raise, you still got your health insurance, and you just got a $21,000 tax deduction at the same time. Not to mention all the other things you get to write off because now you're a business owner, so you get to write off your phone bill, your home office, your cars. So this is a way for everybody at home. If you have a W-2 high-paying job, you can still keep your job, be paid as a contractor, make more money, and pay less taxes.
And these are things that you could not do as a W-2 employee.
Absolutely not.
Right? Because as a W-2 employee, you can't like write off anything. Wow.
You know, so now you got the safety of your job, but you also get the benefits of all these tax write-offs. So now if you work from home, you can now write off a portion of your rent because now you can write off your home office, right?
Yeah.
If you're driving your car to your job, now you get to write off your automobile expenses. So you just get all these amazing tax deductions and you make more money.
Yeah, no, I love that. And you know, one of the things that, you know, I appreciate about you is, again, you know, I call you the tax expert of the culture because of your background, because of your story. We did an episode before, but for those who don't know, I want to read your bio again. Yeah. You know, originally from the south side of Chicago, Carter Cofield is the embodiment of the rags to riches story. Despite losing his mother at age 14 and his father at age 16, Carter has been able to solidify himself as an expert in the financial industry, educating his community on the importance of financial literacy. Having suffered through so much loss at a young age, his past experience fueled his drive to never give up. His businesses, Carter Cofield Concepts and Melanin Money, serve to educate minorities and millennials on financial literacy and entrepreneurship. In addition to his business success, Carter has also gained a large following via social media, where his daily tax tips and advice are liked by millions. We got a couple of reels that got millions of views to the point where I was like, yo, don't invite me as a collaborator no more. You know what I'm saying? Because I keep getting like, yo, I swear, but it was like a million. And every time I get notification, it's like bing, bing. It's like something, right? And so it was important to me to read that because, again, you know, as somebody, you know, I lost my mom when I was 39, and that hurt, right? But I could not imagine losing my mom, you know, at such a young age. And for you to not only lose your mom, but lose your mom and your dad at such a young age, but then still be able to, you know, fight through a lot of that to become a super duper successful business person, personality. You know, you got mentorships where you are helping people. Like I remember talking to somebody the other day, and they were just like singing your praises as about how much money you've been able to save them, and you know how you've been pushing them to be better, and you know to navigate their business. What is the key to that? What is the key to go, right? To keep going when everything that you're going through tells you to stop, your circumstance, your situation, everything is telling you to give up. Like, what is the key to like pushing through? Yeah.
So like tragedies don't define you; they reveal you.
Oh,
right. Yeah. So for me, those things happened to me at an early age. It helped me because like if I can get through this, the rest of life is easy.
Facts, yeah.
If you can get through losing your mom, losing your dad, and you can like overcome that, then starting a business, like what are we talking about? Like you know, like putting yourself out there, like you know, taking a risk and leaving a job. So for me, it was God cultivating me early. Like yo, I'm putting you through this because the rest of the test in life gonna be easy compared to this. So I think that if we understand that we're being groomed and not punished, then it helps us be able to keep going, man. So I look at it as a blessing. Like I tell people all the time, losing my parents at an early age was an advantage because I grew up at 16 years old, like adult at 16.
Right.
Most people don't grow up till they're 21, 25. Right. I had a 5-year, 10-year head start on you.
Right.
So like you're not catching up to me.
Right.
I've been in this for a while. You know what I'm saying? Like I'm gonna lap you up. So like the way I look at it is like, yo, everything can be turned into an advantage if you allow it to be.
Yeah.
That's how I live my life.
Yeah, and I wanted to give, and we're gonna get back to the tax. Like, this is perfect because I know, because we be in the chats live, so nobody come at me in the chats. But I wanted to humanize you for a second, right? Because I think that we kind of jumped right into the tax information, but I want the people to know. Who are they listening to, right? Like, this is somebody who is just like you, who has been through some trials and tribulations. But are you the first multimillionaire in your family?
Absolutely. Yeah.
First multimillionaire in his family. Really
won't be the llast.
Right, exactly.
Won't be the last.
Absolutely, absolutely. And so let's give some tips, right?
Yeah.
Because we talked to our W-2 employees, right?
Yeah.
We told them how switching over to 1099 could save you 7% on your tax, 7%, but more than that, actually, right?
Yeah, they get 7% raise.
Right.
They'll save them maybe 20 to 30% in tax. And I love that you humanize it, because I feel like people don't care how much you know until they know how much you care.
Facts.
Right? And I really do this. I really dove into taxes because I didn't see anybody doing it for the culture.
Yeah.
Like, when it comes to stocks, we got Trap. He's
Right.
he's the stock guy for the culture.
Facts.
You know what I'm saying? And I'm like, yo, everybody's teaching our culture how to make money, and that's beautiful.
Yeah.
Right? But who's going to help us keep it?
Facts.
Because if you make $1 million, but you got to give $500,000 away, that's going to hurt.
Yeah.
Right? So so now that our culture is understanding how money works, I'm like, oh, okay, I need to be the person that teaches everybody how to keep it.
Yeah.
Because we got millionaires and billionaires like Grant Cardone, and who are not paying taxes.
Right.
But we got W-2 workers who are making $100,000, but they paying $40,000, $50,000 in tax. That's not okay.
Yo, it's so crazy because I was talking to Pushman Mitch, right? And Mitch was telling me his first year making $1 million. I think he made 2.2 million. His first time making it. I think it was like 2018. And he didn't know what was deductible, what wasn't deductible. So he had spent all the money already, and he got a tax bill for $600,000. Right, so while he made the most money he's ever made in his life,
he now might be in the biggest hole he's ever been in his life.
And that's what happened. So 2018 he's up. 2019 he back on grind mode because he got this bill $600,000 and he doesn't know, right? And so we don't want anybody to be in that predicament because this is a great opportunity for people to make a lot of money fast, right? But we don't want people to be in a predicament where they're it's really spending, right? They're spending that much money on, paying the IRS. So give us like 3 tips for entrepreneurs that can help them, not have to pay taxes, and they can, to create tax-free living.
Yeah, man. So I'll give you one about tax deductions, and then what about investing? Because I feel like, yes, we can write everything off, but I want us to build wealth and save on taxes.
Yeah.
So one of the main things that we can do as entrepreneurs is just understand that what's tax deductible. Because here's what I tell people all the time. The question is not, Carter, is this tax deductible?
Yeah.
The question is, Carter, how can I make this tax deductible? It's about creativity, right? The tax code says any expense that's ordinary and necessary to operate your business is tax deductible. We get to decide whether something is ordinary and necessary to operate our business.
Wow.
So we just need to be intentional on the front end before we spend the money. So for example, like if you're traveling somewhere, anywhere, find business activity in that location, and now that trip is tax deductible. So that's simply going to take somebody out to lunch, take somebody out to dinner on a business dinner. You now can turn that trip, whether domestic or international, into a tax deductible expense. People ball out on their birthdays all the time. Right? And I'm like, yo, I get it. You want to blow it back on your birthday. But there are ways that you can make your birthday a tax deductible experience. I was just telling this. I was at $1 million worth of game, and I was talking to Wallow about this. I'm like, yo, your birthday coming up. Here's what I want you to do. Host a mastermind for your birthday. Like the first 3-4 hours, invite your people over, talk business strategy. We all should be trying to get to the bag anyway. Talk business strategy, record it, take pictures, take attendance, and then you can party after that. But now we just turned your birthday party into a legitimate mastermind, which is a legitimate tax deductible expense. So it just comes to being creative and understanding, all right, before I spend the money, ask the question, how can I make this tax deductible? And then run the play so you can be able to write it off on your taxes.
And let me just expound a little bit, because my wife and I, we ran this play about 2 years ago where, you know, my parents are from Haiti, and I had never been to Haiti before, right? And so I wanted to go to Haiti for my 40th birthday, but, you know, it was me, my mother-in-law, my wife, my 2 kids, so it was an expensive trip, right? And in order for us to deduct it off our taxes, my wife writes children's books. So my wife literally wrote a whole series on the Haitian Revolution, right? And so it's a 5-book series available now. IamRoyaltyBooks.com. Go get that. It talks about all of the heroes of the Haitian Revolution. So Francois Mackendal, Duddy Bookman, Jean-Jacques Dessalines, King Christophe. And who am I missing? I'm missing one person. Oh, man, I forget. I know Dessalines, right? No, I said Dessalines. I don't know, but it's 5 of them, right? And don't come at me because I know my Haitians gonna come at me. Don't come at me. I'm gonna have to find the names, and we're gonna have to edit that in, right? But so now when we went to Haiti, we visited those locations to do research, right? To do research on these locations and talk to the locals so that she can use for the book. But now that whole trip is research. It's not a vacation.
Now that whole trip is research and development. So now you're able to have an amazing experience with your family, and you're able to write the trip off on your taxes. So that brings me to another place. So for everybody that has kids, please hire your kids into your business. Because there's a few benefits in doing that. If you have kids, and I recommend between the ages of 6 and 17 for the tax plan I'm about to give y'all, hire them into your business, have them do work like social media or cleaning the office or whatever. The point is, if you have your kids do legitimate work in your business, this year in 2023, you could pay them up to $13,850 each. So you, the business owner, you get a $13,000. Let's say $14,000. You get a $14,000 tax deduction for paying your kids for your business. You're gonna spend your money on your kids anyway.
Facts.
But now you get to write it off in your business. And because of the standard deduction of this year, the first $13,850 your kids makes is tax free to them because their standard deduction wipes out the income. So now you just passed $14,000 from your business to your kids. You wrote it off, and they receive the money tax free. You can do this from the ages of 6 to 17. And the beautiful part about this is that now that your kids have earned income, they can open up what's called a Roth IRA. So now you can take $6,500 of that $14,000 and you can start investing for them. So you can do this every single year. And if you do this from the ages of 6 to like 17, your kids are going to have over $100,000 of tax-free money by the time they're 18. So now when they're 18, they can go to college, or they have this $100,000 that they can use to start their business or whatever. And it's just like, let's put our kids in a position to succeed, and let's put ourselves in a position as parents to take advantage of the tax code by writing off the money we pay them. Wow,
and that's so powerful, because even as you said that, once they have that 100,000, there's other plays that they could run with that to even whether it's infinite banking, getting into that life insurance, and then it's so many different plays. And so let's talk about the investing part, right? The building wealth part, because I know coming from a W-2 background and now a full-time entrepreneur, but prior to because I was so used to paying taxes, when someone said deduct taxes or tax deductible, like that felt good to me, right? And so the goal was only about saving from paying, but not necessarily focusing on saving to invest, saving to build wealth. And so how can taxes help you build wealth?
Got you. So there's a strategy that shout out to my dog Chris Senegal. He talked about this on another podcast.
Chris.
Yeah. So it's this concept called buy, borrow, die. Have you heard of it?
Yeah.
Okay. Yeah. So it's basically, as you make money in your earning years, right? Use that money to purchase assets like real estate, right? So let's say you buy a real estate property every single year. You invest this money in real estate, and so if you do this for five or 10 years, you now have a real estate portfolio. you use the money that you, first of all, real estate will help you save on taxes. We'll talk about some tax plays of real estate in a second. But for this point, you buy these assets, you buy this real estate, and so like on the second half of your life, you have all this equity built up in your real estate portfolio. So you might have only bought $500,000 worth of real estate, but you might have $3 million in equity right by that time. So now the second half of your life, you can borrow against all the equity that you have in your properties. So you can borrow, let's say $2.5 million of all the equity in your properties, and you can use that money to live off of. So now the second half of your life, you're living off of tax-free money. So you bought these properties, you got all this equity, you borrowed against it because loans are tax-free to you, and now you lived off that. And then what you want to do is you want to buy a bunch of life insurance policies. Because you want to buy life insurance policies to match the equity that you have in these properties, so that when you die, your life insurance is going to pay off all the debt that you have on the properties. So now you're passing down $3 million of properties to your kids because the life insurance paid off all the debt.
Wow.
But now look at this. Now your kids, they have $3 million worth of property that has no debt on it.
Right.
So now they can borrow against the debt of the property. Now they can get $3 million of tax-free cash that they can use to start buying other properties, start building wealth. So you just start this trajectory of living tax-free and passing down assets debt-free to your kids every year.
Wait, so let me get this straight because my head hurt right now. Let me just get this straight, right? So you mean to tell me that I could live off of borrowed money because the IRS only taxes you on earned income, right? So, or earned income, interest income, like money that I made through, asset appreciation or whatever the case may be. But if I'm borrowing the money from somewhere, and that money is $1 million or however way, even if it's $100,000. That is borrowed money, so I don't pay taxes on that borrowed money.
Exactly.
But I still could use the borrowed money. So whether it's $100,000 I earned or $100,000 I borrowed, it's still $100,000 that I have access to that I could use, right? And then when I use that money, I don't really have to pay it back.
You don't really have to pay it back. You have to pay back the minimum payment.
The minimum payment.
But you can set money aside for that. But now, so for all my workers out there, use these working years to buy assets so that you can have a retirement plan, but you don't got to worry about that. At 40, you can quit.
Yeah.
You can live off of all the borrowed money.
Yeah.
Then you buy life insurance policy so that when you die, you're like, all right, my kids don't have to pay these loans back because my life insurance will give them all the money that they need. Because life insurance proceeds are tax-free as well. And they're using this money to pay off all the debt. So now you can retire earlier doing this method than depending on a retirement plan.
Wow.
You know what I'm saying?
Wow.
So there are ways you can build wealth and enjoy tax savings.
And so why are we told often to stay away from debt, right? Like, cause like when I look online, I've been a financial educator for over close to 20 years now. And the prominent financial educators out there are always advising against debt, like say no to debt, don't use debt. But if I listen to Carter, I feel like debt. Even I've heard Robert Kiyosaki say the same thing. Yeah. Like debt Grant Cardone, I heard him say the same thing. Like debt is actually a wealth accumulation tool.
Absolutely.
And so why on one end do we have the Carter Cofields, the Grant Cardones, the Robert Kiyosakis telling us to use debt, and then on the other end we have financial people telling us not to use debt?
Because most people don't know how to use the right type of debt. So there's such thing as bad debt. Like you're paying 40% on a credit card and you're using that credit card to buy consumer goods, then yes, debt is bad. Yeah. But at this high level of financial literacy, we're understanding, hey, debt is a tool to help us win. Yeah. And for me, I'm listening to what the government said. Like whatever the IRS tax code said, that's what I'm looking for. And it says debt is not taxable. So my thing is, how can I become my own bank and use my own debt to live off of and to save on taxes? Because even when you become your own bank and you borrow money from yourself and your assets, you have to pay interest back. But guess who you're paying the interest back to?
To yourself.
Right. So I'm not worried about paying myself back interest. You know what I'm saying? So I think that we need to shift the way we think. And we were taught so it depends on where you are in life, right? Like what gets you here won't get you there. saying that debt is bad might help you through like high school and college so you don't use your credit card.
Right.
But when you try to become a millionaire, multimillionaire, you have to understand that debt is here to allow you to build wealth and build wealth fast.
Yeah.
You know what I'm saying?
Yeah. No, I love that. Let's talk about your 5-day challenge, because I feel like, you know, and that was one of the other reasons why I wanted to get to this human experience, because all of the information that you've learned, you have created an experience where you're, again, teaching people how, you know, this concept of tax-free living, and you created an experience where they could spend 5 days with you, which normally would be a lot of money, right? But they could spend 5 days with you and to get some games. So talk about the 5-day challenge.
Yeah. So what I learned is that like I have so much knowledge, it's impossible for me to teach it at one sitting.
Yeah.
And a lot of the times I have to give you the mindset before I give you the skill set, because I can give you all the tax plays in the world, but if you're still scared of taxes, you're not going to run them.
Yeah.
So the reason I create this 5-day experience is because I need to first break down your limiting beliefs and then install new beliefs before I give you the strategies. Yeah. So this 5-day experience is teaching people how taxes work, how they can take advantage of it, how they can live tax-free, how they can start investing and taking advantage of all the plays that millionaires use. Like when I was working, I was advising multimillionaires on all these strategies to keep their money. And I'm like, yo, I'm not even giving this to my people, right? So I wanted to cultivate a 5-day experience where they can come in being an average Joe, but they leave out being a wealth-minded person. They know how to invest their money. They know how to live tax-free, and they know how to write off everything and have their entire lifestyle be tax deductible. Like you can write off your cars, you can write off your clothes, you can write off your trips, you can write off your vacations, your birthdays, and I just want to teach you how to do it properly, how to document it, right? Because the last thing you want to do is run these plays and run them wrong.
Right.
So I like to give them a 5-day experience where they can ask me questions and they can get all this game that I have. And when people leave there, like they're like crying, saying their life has completely changed because like, yo, they didn't teach us this in school.
Facts.
They not going to start teaching this in school. And we look at other people and we get upset when wealthy people are saying they don't pay taxes. I tell people all the time, don't hate the player, don't hate the game. Just learn the game so you can win the game. But there has to be somebody willing to teach. There has to be somebody willing to teach the game so that our people can get it.
Yeah.
You know what I'm saying?
Don't hate the player. Don't even hate the game. Just learn the game, right?
So you can win the game.
Because you know, as a fact though, because you know, for years when I was living in lack because I wasn't aware that abundance was all around me, and I was living in lack, and I was watching other people live lavish lives. I don't want to. When it's my turn, don't change the rules when it's my turn. Let me live. You know what I'm saying? Can I live without somebody saying I floss too much? Like, let me live.
Yeah.
You know what I'm saying? And so, you know, I love that. You know, and the reason again, you know, it's important for people to spend the 5 days, because you said something that was very, very important, where you said you have to learn how to implement this the right way, because. And I want you to expound on that. Can you tell me the difference, right? Because, you know, I look at you as, you know, I say the tax expert of the culture. You are a tax strategist, right? Like you have the tax strategies, right? It's almost like a puzzle. You're like, all right, you know, do this, then this, and then this, then that, blah, blah, blah. It's like a whole puzzle.
Right.
And if you, like an equation.
Yeah.
You know what I mean? Like EM equals M squared and all that stuff. If you don't do that right though, it's not.
If you miss a step, it's gonna be a problem.
It's gonna be a problem. And so you have a whole tax strategy to say, all right, do it this way. So what's the difference though between a tax strategist and a tax preparer?
Ooh, this is good. So and most people think they have tax strategists when they really just have tax preparers, and that's where they mess up at. Yeah. So a tax preparer is just somebody that's going to take the paperwork that you already have. Yeah. They're going to put it into their tax software, and they're going to spit out your tax return. Tax preparers simply tell you how much you have to pay. A tax strategist is going to look at your situation and give you strategies on how to minimize your taxes. So tax preparers tell you how much taxes you have to pay, or tax strategists teach you how to save money on taxes. So like when I work with my students, we're looking at their situation like, okay, you have kids. Okay, well, we're going to hire your kids into your business. Yeah. We're going to pay them this way. We're going to transfer the money this way so that we pay your kids properly, right? That's number one. Oh, okay, you have a vacation coming up. Well, guess what? You hired your kids, you hired your wife, you hired your entire family. That Thanksgiving trip that y'all about to to take, that's not going to be Thanksgiving trip. That's going to be a board of advisor meeting because your family works for your business. Right. As long as y'all have a business meeting, now we're writing off Thanksgiving. So I'm giving them, based on their lifestyle, I'm giving them plays that make sense for them. Every play is not going to make sense for you.
Facts.
So you have to understand specifically to your situation, what plays are going to work for you and which ones are going to benefit you the most. Because here's what we're not going to do. Because of all my black people out there, I love y'all.
Yeah.
But we're not going to buy things that we can't afford just to save on taxes. That's what we're not about to do.
Word.
Right?
Yeah.
And I love the car plays. I love the G-Wagon plays. But, yo, don't look at it. If you ain't making mid six figures in your business,
facts.
a G-Wagon is not for you.
Not facts, what I'm saying.
Spending money you don't have to save money on taxes is what we call hustling backwards. We're not doing that. So the reason I'm so passionate about what I do, because I can give these plays all day, but I need to give you the plays that work for you.
Yeah.
Because like if you saving on taxes, but now you can't pay your bills, like what are we doing?
What's the point? Yeah.
What are we doing?
Yeah.
So I think it's very important that we understand that. And I do have a couple more plays I want to give the people. So there's this play that I knew about, but like I've successfully executed with 50 students last year, and we helped them save $200,000 in taxes by just being at home. So it's called the Augusta Rule. Have you heard this before?
No, I never.
Oh, dude. Okay. Here we go.
So,
so, dude, wealthy people have been doing this for years. So the Augusta Rule comes from the Augusta golf tournament, right? That's held in Augusta, Georgia. And basically, the wealthy people out there were renting out their homes to people that came down for the tournament, and they didn't want to pay taxes on the money. So the government instituted this thing called the Augusta Rule, which allows you to rent out your primary home to your business for up to 14 days a year. Your business gets the write-off, and you, the owner, receive the money tax-free. So let me break it all the way down.
Wait.
Yeah, it's crazy, bro. It's crazy. It's like it literally doesn't make sense, but it's legal.
Yep.
And it works, and it's been in the tax code for years. We're just late to the party, right?
Yep.
So you, Ash Cash,
Yep.
if you own a home,
Yep.
you can rent out your home to your business and charge your business daily rent.
Okay.
So let's say you go on Airbnb and say like, all right, Ash, you got a nice spot. Your spot would rent out for $1,000 a day if you would rent out Airbnb.
Yep.
Okay, well, you can charge your business $1,000 a day for 14 days, and you can use your home to operate your business. So you can do a content day in your house.
Yep.
You can have a meeting with you, yourself, and I. You can invite some friends over, whatever the business activity is. But for 14 days a year, you can charge your business $1,000 of rent. So 1,000 times 14, that's $14,000. So your business gets a $14,000 tax deduction, but you receive that money tax free because you don't have to pay taxes on that rental income.
Wow.
You know what I'm saying?
Wow. And so that's an additional $14,000
that you just took from your business,
right? And
you don't have to pay any taxes on it. No federal taxes, no state tax, no FICA tax, but it gets better, right? So,
but wait, there's more.
So, here's the part that shocked me. I'm like, oh, this is crazy. So you get to decide which 14 days you pick. It could be any 14 days of the year.
Yeah.
But to charge your business, you have to find comparable rates for your crib. So I'm thinking like, all right. Why, if we pick days where our city has a major event, then the rent comps go up. So if you happen to pick it when the Super Bowl is in town or a big basketball game, now for those days your house went from being able to rent out $1,000 a day to $2,000 a day.
Wow.
So now you get a $28,000 tax deduction.
Wow.
And now you get $28,000 to your personal self tax free because you get to pick the days.
Yo, fireballs in the chat, y'all. Y'all missing this. Look.
Yeah, so if you run this play, just look at the calendar in your city and say, okay, we have that big event, we have that concert, Beyonce's coming to town this day.
Yep.
So you pick those days, and now you're able to charge your business this massive amount of rent, and you're able to get this money tax free to yourself.
Wow. And that's what I'm saying. Like, and I want y'all to be clear. That's why it's important to have a tax strategist, right? Tax strategist, right? A tax strategist and a tax preparer, because again, the strategies that people are learning or people are going to be implementing, they have to be able to learn it from somebody who is making sure that they're up to date on the tax codes as well, right? Because the G-Wagon play, right, is that like the 6,000? Is that over, right? So
it's not over. So that's a good point. So And last year you were able to get a car over 6,000 pounds.
Yep.
And whether you paid for it or not, you was able to write off the full cost of the car in the first year that you purchased. So last year, before the end of the year,
that did me well because you know I gotta.
Yeah. I mean, I ran the play too. I bought a Lamborghini in December, a Lamborghini Urus.
I need one of those too.
Yeah,
man.
yeah, it feels good.
A white.
Yeah, I can say that look good on you.
White with black rims though too.
So the car was about $230,000.
Yeah.
I put $40,000 down.
Yeah.
So I came out of pocket $40,000.
Yeah.
But I got a $230,000 tax deduction. Right. So
all the mills you made too.
Yeah. Right. So I'm from the highest tax bracket. That car literally saved me $110,000.
Right.
And to be honest, I don't even drive the car. My homie rents it out, private rentals. That car made me $15,000 last month.
Wow.
You know what I'm saying? So I don't even have to, but like I got the car because I need the tax savings.
Wait. Hold on, brethren. Hold on. Hold on. We're not just gonna skip over that. We're not gonna do that.
Yeah.
So you buy a car, which everybody, these gurus gonna tell you a liability, right? You buy a car for $230,000. You put $40,000 down.
Use my Amex card to put that $40,000 down. I use my Amex card for the down payment, and so I got points back for that. So I wouldn't need my money, but go ahead.
Wow, right? So you put $40,000 down. Use the Amex to do that. Got points for it, right? Now you got a $230,000 deduction off of your taxes, which help you save about $110,000.
Yeah, then I use that money I saved to then pay off the Amex card.
Right.
So I ain't using any of my money. That was the IRS's money. I was going to have to pay
So the
them
money that you saved, you paid the Amex back. Now you took this car and you were able to give it to somebody who puts it on a rental.
Yeah, shout out to my homie Mike, MTB,
right. Salute to Mike.
Exotics, yeah.
Mike puts it out. It's being rented out.
$1,500 a day.
Making $1,500 a day, about $15,000 a month.
Yeah, that was on 10 rentals last month. Wow. That's only 10 days out the month. And so the car made me $15,000.
Which means that $40,000 you made back.
I make it back in 3 months.
In 3 months.
Yeah.
And then now the car is a free car. Matter of fact, it's not even a free car.
It's a car that's paying me.
It's a car that's paying you.
It's paying me more than my.
Where my wife at? why we don't got a white Urus? Like, what's happening? Where she go?
Yeah. So the point of all that is that saying now in 2023 it's not gone. You can only write off 80% of it.
Okay.
So if the car,
230.
so whatever 230,000 times 80% is, that's how much deduction you will get this year.
Okay.
And then you're able to write off the other 20% next year.
Okay.
So 80% this year, and then the other 20% you get to write off next year.
Okay,
right?
got it.
So it's not that it's gone; it's just not 100% anymore. It's 80%, which is still a big amount of money.
Not 100%.
It's still a huge deduction.
100%.
You know what I'm saying?
Yeah,
so,
last year my car was 130.
Yeah, so you got 130,000.
It's like 130 off a rip.
Off the rip. Yeah.
But I ain't renting it out though.
Well, I mean, you got this year. Holla at Mitch. Tell Mitch to get you a car. You know what I'm saying? And then run the play. Yeah, run the play.
Yo.
And
yeah, I don't know. Look. If y'all not pausing this right now and hitting the link in the description to join him for 5 days.
Oh yeah, this is the free game.
Because that's not even all the game. We don't even got time for all the game.
This is the free game. Like imagine how much it's the pay game. You know what I'm saying?
Wow.
But yeah, man, it's things that we didn't know, man. And like I tell people all the time, like if like the most expensive tax that we pay is not federal tax.
Yeah.
The most expensive tax we pay is not state tax. It's not city tax, not property tax. The most expensive tax that we pay as a people is the ignorance tax.
Oh, bars.
Right? The
That's
tax
fact,
of not knowing how to avoid paying tax.
Facts.
Like it's costing us millions as a culture every year not knowing how to avoid paying taxes.
Yeah.
And I'm just like, it's got to stop, man. It's got to stop. And I think that making it understandable for the people is my job, and helping them give them the plays. So that's why this 5-day challenge, it might be my last one I'm doing too. It's a lot of work, but this one is I hope to shift the culture with this one.
And so, you know, I don't want it to be all fluffy, right? Because there gotta be mistakes people are making that's keeping them from the bag, right?
Yeah.
So give me like one of the top 1 or 2 mistakes that entrepreneurs are making.
The number one mistake every entrepreneur is making is they don't have a bookkeeper. all this stuff sounds good, but you can't write off what you're not tracking, bro. So if you got a car or whatever, if you spend this money, but if you're using your personal account to spend the money, how you gonna be able to track that? You know what I'm saying? If you're using the wrong card, so if you don't have a bookkeeper in place and like a good bookkeeper, that's like, you should have a bookkeeper. Your bookkeeper should be sending you monthly statements on how much you made and how much you spent. Because again, you can't write off what you don't track. And the number one thing I see business owners doing, they're trying to run these plays, but they don't have anybody tracking their expenses. Like a bookkeeper is that's like an entrepreneur's assistant. Like that they are the principal of your business finances.
Nice.
So like, if you're an entrepreneur, like get a bookkeeper. Don't do it yourself. Don't play yourself like that. Like get a bookkeeper, track all the expenses, have these business bank accounts set up, and get these business credit cards so you can use the right accounts for the right expenses. So that's like the number one mistake I see business owners making is not having that bookkeeper in place. Yeah.
And that's important that you say that, because I think that, as an entrepreneur, things happen so fast. Yeah. And you really don't have no time.
It's hard being ass cash every day.
I mean, it's tough.
But somebody got to do it.
But but I don't think people realize that. I don't think people realize how much it goes into being a successful entrepreneur, right? Like, it's like, to be a successful entrepreneur, not only do you have to work hard, I think you work harder trying to maintain success than you do trying to obtain success.
Yeah, absolutely.
You know what I'm saying? Because you're working hard to try to get to this spot. But while you're working hard, you're living a regular life, you're striving or whatever. But when you finally get there, like when you experience what abundance really feels like, now there becomes this period of maintenance. Like, how do I maintain? All right, now I got to maintain this success. And there's a lot that you have to do, but then all of the things that you were doing on your way up, you don't have time to do them, because if you do them, you're going to drop the ball on the things that keep you successful.
Talk about it. It becomes a who, not how thing. And every entrepreneur should read this book by Dan Sullivan called Who, Not How. Yeah. Because again, what got you here won't get you there. Building your way up, you have to do everything. When you get there, you need to hire a team to be able to manage everything. So like, at this point in my career, whenever something comes up, I ask myself the question, not, Carter, how can we get this done? But who should be doing this, right? Who should be doing this, giving that person the job, paying that person well, and having them handle things. Because if you're going to maintain this level of success, you have to stay in your zone of genius. And that is doing whatever you do best and delegating the rest. Period. You know what I'm saying? So I think it's vital, man. If we want to not just attain success, but maintain success, we can't be scared to spend the money on a good team. That's just, you just have to do it. You know what I'm saying? Because you can survive without community, but you can't thrive without community. You need a community of people that want to see you win.
And to be truthful, it's impossible if you have good team members that make you more money. Like, it's impossible to have good team members and you lose money. You're not, like, if you're losing money, if the money that you're investing in your team doesn't result in a increase, then you don't have the right team people.
You don't have the right team, or you're not the best leader. Like, there's no way that you can put this ensemble together without a good team.
100%.
People behind the studio, and like 100%. They deserve their credit.
Best team out. Fast shout to everybody.
Shout out to y'all.
Fast shout to Dagoberto. Fast shout to Clay. Fast shout to Makeda. Fast shout to the First Lady. No, everybody. And I say, it's funny because the truth of the matter is that I'm in a season of making the most money I've ever made in my life. But I'm also at the season where I'm investing the most money I've ever invested in my life. Like, I don't even say my monthly.
Make me feel better, please. This make me, because my monthly is high. So just give me a ballpark so I can know I'm not spending that much.
My monthly is 6 figures.
Oh, okay.
You had 6 figures?
No, I'm not at 6 figures.
Not yet. All right. So yeah, my monthly is 6 figures. Right? So while people are like, yo, I'm trying to make 6 figures in a year, right?
My payroll.
What whole said, I forget the bar where he's like, yo, what y'all call money? I spent that on taxes, but I don't spend it on taxes. So we gonna remix that bar hole. We don't spend that on taxes. What you call money, we get that in deductions or something like that. Or something.
But I think it's important because, like, that's a different mindset, right? Like, the goal was 6 figures, but now, like, again, the goal is a 6-figure payroll because
Right.
now I'm pumping money back
100%.
into my community because I'm
Yeah.
hiring the people I want to hire.
Yeah.
I'm paying them well.
Yeah.
Right. So the goal went from I need to make 6 figures
Yeah.
to like, how can I reinvest 6
Exactly.
figures into the people that work
And you
with
know,
me?
and just to kind of get from a perspective of why everybody should be making money, right? So last year, you know, our companies reinvested close to $5 million back, right? So that's that was payroll, that was vendors, like close to $5 million. Like that is in real money.
Yeah.
And I say that because, I mean, you know, we in the entrepreneurship game. So a lot of times people be like fluffing money. It'd be like saying a number, but it ain't a real number.
What went in the account? What came out there?
Exactly. What came in the account, what came out the account, right? Last year was $5 million.
Yeah.
And that means that when we think about maximizing our full potential, right? If I would have gave up, project kid, you know what I'm saying? Single parent home, kicked out of school 4 times, one mistake away from a felony. If you would have gave up, right? South side of Chicago, losing your parents at a young age, could have easily went down the wrong path, right? We would not be supporting our community.
Facts. And let's bring it all full circle. The reason why the government and the IRS rewards business owners and gives all these tax deductions because we're doing their job for them. And think what you just said. You just put $5 million back into the economy in jobs.
Yeah.
That's $5 million worth of jobs that the government didn't have to create.
Facts.
That's $5 million worth of unemployment the government didn't have to fund.
Yeah.
That's $5 million worth of food stamps that the government didn't have to pay out. So because we're pumping money back into the economy, we're hiring people, we're creating jobs. That's the reason why we get the deductions that we get. That's the reason why we get to, you know, make all this money, but we get to keep all this money because we're doing the hard work for the government. They're like, okay, yo, if you're going to pump $5 million into the economy, if you're going to hire all these people, if you're going to invest this money in the charities, if you can do that, you don't got to worry about paying taxes. Because you're doing your part and to help society come up as a whole.
Yeah. Real quick, right? Let's talk about charities for a second.
Ooh, I got to play for you.
Give me that play because we started a foundation last year.
You ready for this?
Talk to me, brother. I want all the smoke.
All right, so here's a play, man. I've never given this away for free, and I'm debating if I want to do it or not. But you're my guy, so I got to do it, right?
Look, you got to, B.
I got you.
We not editing nothing. Look, we not editing nothing, B. You don't give us this play.
So here's a play, man. So like, I don't know how much you are into art, but like I've started studying art a lot more. Shout out to my girl Tanya Rapley. She's like, you know, super into art.
Absolutely.
So you can buy a piece of art, right? Hold it for a year, then get it reappraised, right? So let's say you buy this art for $50,000, but the artist and it blows up, or you know, you have and then you get a reappraise for $500,000, right? You can now donate that $500,000 piece of art to a charity, and you will get a $500,000 tax deduction for donating the art to the charity. Wow! Again, you spent $50,000 on this art, but because you get a reappraised a year or two later, and now you're able to donate it to the charity, you get a $500,000 tax deduction for donating it. But here's what's even crazier, right? If that wasn't crazy enough, bro, I read this. I'm like, this is crazy. But then again, I look up, millionaires have been doing it for decades.
Wow.
I'm late to the party.
Wow.
We late to the party. So, so you can also open up what's called a private family foundation, which is just your own charity.
Yeah.
So I can open up a private family foundation, and I'm the sole donor to my foundation. It's still 501c3 and everything.
Yeah.
But now I can donate that art to my own foundation and still get the $500,000 tax deduction and still keep my art.
Right, because I was gonna say, like, if you're donating it to the private,
and it's mine, so I guess I get to keep my art, right? So because I want to keep my art, so now I get a $500,000 tax deduction and I get to keep my art in my collection because I own the foundation. And then guess what? When I die, guess who gets it passed down to them tax free? My kids. So now my kids have all this art, and my kids have the foundation, right? So now I got to only spent the $50,000, got a $500,000 tax deduction, and I got to keep my art.
Yo, my head hurt for real though. So you're telling me I bought this asset, got it reappraised, right? So I only spent $50,000 on this art. A year later, this art gets reappraised at $500,000, right? At $500,000, I donate that art to my foundation, which is a 501(c)(3). That $500,000 now, because I donated, on my business taxes or personally, I get a deduction of $500,000. So even whatever money that I made over here, I can now deduct that. I don't have to pay money on that because I bought that art. That art, though, that now is donated to my private family foundation, I don't have to technically give it to nobody. I could still have it on my wall and enjoy that piece
of art
and a $500,000 deduction.
If that don't make you want to join this 5-day challenge,
sheesh.
That's one of the plays I do give away in the challenge, but that one I have to give away here. But like, I'm just telling y'all, the plays are deep.
Wow.
The well is deep on this side. When it comes to information.
Wow. Yeah. Listen, y'all, I need y'all to go to InsideTaxFreeLiving.com or hit the link in the description. Spend 5 days with Carter Cofield, the tax expert of our culture, of our generation. Take me back to 18-year-old Carter, man. With everything you know today, what advice are you giving 18-year-old Carter?
18-year-old Carter was playing video games in these streets, wilding. I would tell him that there's more information in books than there is in any institution.
Wow. Yeah.
And although I went to college, undergraduate, master's degree, never stop learning. Like most people graduate from school or whatever, and they think that's the end of learning. That's the beginning. School teaches you how to learn so you can go learn what really matters. Yeah. Right? So I would just tell them pick up a book and never stop learning, because there's more information in books for $5, $10 than there is in any institution. So I would tell them never stop learning, because that's what got me here today.
Yeah. I love it, y'all. Yo, Carter Cofield. Yo, go. He's the official tax expert for Inside the Vault. You know where you heard it first, man. That's it. He's gonna be our tax guy, because he just look. So y'all don't even know, he just gave me a free tax consultation, right? Because all of this game, we about to apply all of this game right now. Make sure y'all go to InsideTaxFreeLiving.com. Hit the link in the bio. Join him for the 5-day challenge. Man, any last words for our people, man? We gotta have you back, bro. We gotta have you back.
Yeah. I mean, if the people want me back, just go ahead and show this video love. Share it.
Share it. Yo, let's run this number up, because the last interview he did with us was at 40,000.
Yeah, I want to 3x that minimum.
3x, yo.
Yeah,
y'all gotta show it love. Y'all gotta show it love. Yeah. So like this, share it. Yo, DM everybody. Like let's make this go crazy, because he literally gave you $1 million worth of game for sure. For sure. You know what I'm saying? But also make sure y'all join. The tax-free living challenge. Yeah. Any last words for our folks, man?
Any last words? One of the best things I learned that our mentor taught us is that everybody pays. Yeah. Right. And this is a lesson I wish I learned earlier. I used to be so cheap when it came to investing in myself, because I was worried about spending money on my head versus in my head. Right. And I'd be like, man, I want to join that program, but it's expensive. And our mentor taught us that everybody pays. Right. Yeah. You either pay to get information, or you pay life for not having it. And life will always charge you more for what you do not know. So for anybody who's whether they invest in this challenge or not, whatever you want to invest in, you're the best investment you ever gonna make. Yeah. But just understand that if you don't pay for the investment, you're gonna pay life for not having it. And although I believe that we all should invest in stocks and we all should invest in the S&P 500, let's spend a little time investing in the S&P 500, right? And start investing in ourselves. So that's what I would advise people.
Love it. If people wanted to connect with you, so I know my action takers are money makers. So my action takers, they in the chat, they pause the video, they hit the link, they're going to join you for the 5-day challenge, so they already know how they connect with you. But for those who want to connect with you before the challenge, after the challenge, whatever, where can they find you? Yeah,
so it's Cofield_advisor on all platforms, Instagram, TikTok. And if you want to find me on YouTube, it's Melanin Money Show. I do a tax-free Tuesday every Tuesday on our Melanin Money channel with the podcast on Wednesday. So Melanin Money Show on YouTube, but Cofield_advisor on all other platforms.
All right, there you have it. We are closing out the vault. Another awesome episode of Inside the Vault with Ash Cash, the greatest money mindset show on the planet. Make sure you tap in with the tax expert of the culture, Carter Cofield. Make sure you follow us, InsideTheVaultShow.com. Follow us on all social media platforms at Inside the Vault. Me, I am Ash Cash. Make sure you visit me, IamAshCash.com. Follow me on all social media platforms at I am Ash Cash. Also, make sure you join the Abundance Community. Go to theabundancecommunity.org. We have a lot of behind the scenes with our guests. We have, some questions that we ain't even ask them on the show. So you're going to drop some more bars. But we also have a lot of great things that'll help you elevate your mind so you can elevate your life. Theabundancecommunity.org. And that's it, y'all. I'm going to see y'all next time, same place for another dope episode of Inside the Vault. In God's will, y'all. All right. Peace.